Hello everybody, welcome back. Let's have a look at Bitcoin, but mostly we're just going to think about crypto as a whole here, mostly altcoins, right? Because I think it was a couple of days before Christmas, it was a while ago now, I was talking about how the 42% dominant zone on the Bitcoin dominance does offer an area of potential rejection and maybe some upside momentum for altcoins. Now, I think I probably said that when we first came up to retest it, which, looking at this chart now is... well, I don't know why I'm measuring it from there, but it was a while back. So here we are today on the 7th of January. We came up to test it 22 days ago. This is what I think is the more frustrating thing for people who watch this channel, because I look at things mostly on dailies and weeklies, and for that, by the time the video gets finished, I have Joe Blogs commenting at what. Hey, I've finished watching the video, man, and I called to my mother to give me some cheese whiz and bring it down to the basement. And by the time she came down and brought me the cheese whiz, the chart was still exactly the same place. And I'm like, well, to be honest with you, nothing's a guarantee here. But like I say, if there were to be a rejection, it would only be a small one, and if there was going to be one, it would be around 42%. Now, yeah, 22 days is a while. I appreciate that, and there was never any guarantees. But it does appear that the 22% dominance, 42% dominance has finally found some kind of rejection. And yeah, of course, there's been little wicks. The wicks from the 42 exactly to what we 42.37% dominance. Fair play. But more or less, we've been rejected around there. Again, daily money flow index reaching a 91 over here. It's not the most overheated you've ever seen. Bearish divergence as well on this last tick up. No big deal. It is what it is. The pullback started, and as a result of that, we started to see some upside for altcoins now. Although it was, 22 days after the fact. It is what it is. One of the better charts to look at when it comes to actually thinking about altcoins moving generally is the health of Ethereum, because it takes up such a large portion of the altcoin market cap. So if Ethereum's doing okay, or if Ethereum's got a reasonable setup, then you would expect other altcoins to kind of follow suit. Some will accentuate this move, some won't move at all, but generally they're like the little fish that follow a shark, just moving around with Ethereum, the big shark. So what we see here is a golden cross, and also moving from a pump signal which was generated all the way back over here at $12,616. So it's not the biggest move so far. It is what it is, just a move to the tune of 4%. Again, I've been saying this on the Patreon. If we are going to get any moves, we've got to take them as baby steps. They're not going to be massive. This is not an alt season. It's only a 42% dominant rejection. We'll be looking for a small pullback on the dominance chart, maybe continuation for the whole market, given with what happened with the euro and the dollar and the yen and the S&P yesterday, which worked out pretty well. I was looking for, and I still am looking for a dollar breakout, but on a fundamental basis, without boring you to death about forex, it would appear that the dollar wants to stay low, and central banks, European Central Bank, is going to outperform the rate hikes until for the foreseeable future, which keeps a strong euro. Anyway, that's for another video. Maybe I'll do a forex video, a recap of the week later. This is supposed to be just about altcoins. And so normally what we'd expect from any kind of golden cross would be a retest of that. And this is only a 4-hourly, by the way, but a retest of the golden cross would be a pullback to the tune of about 2.5% at the moment if it were to do it on this candle body. Probably not going to be this candle body, to be honest with you. This is a trending move, which I think we're going to get a bit of a trending move form on these altcoins now through the weekend, because it was such a decent close for markets yesterday and forex markets as well. It was a pretty decent close, so I would expect general continuation, which means that these moving averages will also continue as well. So that'll be a 200 exponential. It's probably a bit steep actually for a 200 exponential. There's your 50 exponential. Looking at something along these lines, and what we'll be looking at for this trending move will be something along the lines of this, maybe a retest of the golden cross a little bit later down the line, at some point next week, provided that indices and forex can behave themselves. So that's Ethereum. The only reason we're looking at Ethereum now is to recognize that we do have this golden cross, and we should be looking at it as building momentum. We don't have that with Bitcoin. Bitcoin's lagging behind. The 200 exponential has been reclaimed. No golden cross in sight. This is again 4-hourly. The pump signal was generated all the way back down here at 16,800, so we're only a tiny smidgen above that. So when it comes to altcoins, I think altcoins have the upper hand. They are the ones that are going to perform the best right now. And Bitcoin at this exact level, should we say above 16,900, which is effectively your 200 simple and exponential on the 4 hourly, 16,900 is actually okay. It's reasonably good. Nothing really to be too concerned about, actually. The next major move for Bitcoin, or this current move that's in the pipeline, should I say, at the moment, and again we were saying it yesterday in yesterday's video, what could move us up to 19,200 or thereabouts. It's still not looking unlikely. I would target 18,000 to begin with, which is part of this big major box here. It used to be a major box of support. It's going to be a resistance box because it was so significant from all the way back in June until we broke down due to FTX. So we can only assume that it's a mega resistance itself, and so we'll be looking for this box to be we'll be looking to test into this range again, just as we did over here, and a steep rejection from that. I'll be looking for that to take place again. The only difference this time is that I think we'll creep into it rather than rally into it off the back of altcoins like Ethereum and all Ethereum's best friends having their little rallies. So I am only looking for things like 5, 10, 15, 20% for the most part on these altcoins before they fizzle out. But we do need traditional markets to emphasize any further continuation with Ethereum and altcoins and Bitcoin as well. And traditional markets, by that I mean Forex initially, and then major indices like S&P, Nasdaq, or whatever. We do need them as an overall baseline for health in all markets. And this weekend, because obviously they're not trading, and we closed so positively, exactly as expected, I think we probably do have at least today and maybe a good portion of tomorrow of upside or at least stability, but downside seems relatively unlikely at this point, unless of course Bitcoin starts to close its 4 hourly below 16,900, and then again if we do start to close below 16,800, I think we give up the game. So those would be the areas that I'd be mostly looking at, and those would be candle body closures on 4 hourlies. Not wicks, candle body closures on 4 hourlies. Right, there's really not much more to say about the market today. If you want to join the Patreon, we'll be looking at whatever you want me to look at on Tuesdays and Fridays. Otherwise, join the Telegram. Leave a comment as well. Tell me what altcoins you want me to look at. And if there's any with a decent chart, I'll make that video for you tomorrow. I'm more than happy to look at charts that I don't necessarily look at. There's too many charts in the world for me to peruse through, and so sometimes I want to be pointed in the right direction. Anyway, I hope you have a nice weekend, and like I say, it's not the most bullish scenario. It's certainly not a bearish scenario, I would say. So let's keep our eyes on the prize and enjoy the rising tide of this trend. Take it easy.